What's up? What's up? Ha! Happy Wednesday, everybody. May 1st. We made it. Big day today. Very important day today. The most powerful man in the world for the next hour is going to be stepping up to the plate at 2 o'clock. All right. So, what do I mean by that? Who's the most powerful man in the world? Why is he so powerful? So, here's the stock markets today around the world. All right. Australia, red, right? Slightly down. Japan, slightly down. China, slightly down. Red. All red. India, France, Germany, England, right? S&P, the US, Brazil. The whole world is red. All the markets are red. They're all down. They're all flat. What are they waiting for? All right. They're waiting for this guy right here. The most powerful man in the world, unelected bureaucrat, right? We did not elect this man. He's appointed by people that we elected, right? And right now, he controls the fate of the world in his hands. What does that mean? So, everybody talks about the interest rate, what's going to happen, right? We know about the rate. So, at 2 o'clock today, Powell is going to announce what the Federal Reserve has decided to do with the interest rate. Okay. So if you need a little refresher, this is the rate. Okay. Everybody talks about it, right? It was flat during C19. They ratcheted it up because of inflation. So that's the thought process that these guys have. They think they can control inflation by increasing the interest rate. But we're seeing that that's not happening. Why? Because they've increased the rate and inflation is still here. So I don't know. That's the tool that they have. Okay. And as you can see, the rate's been flat. So everybody is looking to see today what the announcement is going to be about this line right here, if you can see it. So 2 o'clock today, the rate release. So there's three options. The rate goes up, the rate stays flat, remains the same, the rate goes down. That's what all the world's markets are waiting for. If the rate goes up, you're going to see a colossal sell-off because markets are irrational. They're just emotional, right? Markets are emotional. They're rational in the short term. There'll be a massive sell-off. And then probably Friday or Monday, it'll kind of get back to normal, okay? If it's flat, you'll probably see a little spike in the market because that's kind of good news at this point, all right? If it's down, if he drops the rate, then, oh, man, market's going to go crazy, all right? So that's the first part of today's extravaganza. Now at 2:30, Jerome Powell gets to get on stage and give a speech. And the whole world is going to be listening and hanging on every word as if Jesus himself came back and was like, hey, this is what it's all about. And then look, you're going to hear hawkish, dovish, right? So hawkish is, hey, look, we are, we're going to be tight. We're going to stay the course. We're going to keep this thing tight. We're going to make restrictive policies. The market doesn't like that. Dovish, hey, we're going to start lightening up. So that's what the world's going to be looking at to interpret from him today, right? So, think about this for a second, right? So this guy, unelected, appointed bureaucrat, most powerful guy in the world, all right? This woman right here, Janet Yellen, the Treasury Secretary, again, one of the most powerful people in the world, unelected bureaucrat, again, let's just Google her, watch her interviews with Congress. I don't know. It's not impressive, all right? So here's the people we elect. This is our Congress. Again, not political. It happens on both sides. Here's our Congress, right? All right. These are the people we elect. These are the presidents we elect, right? Throughout history, we've elected presidents. What have they done for us? What have we gotten out of the people we've elected? $35 trillion in national debt. That's what we got, right? That's why we have inflation, because we're printing money and we're spending money we don't have. And the rate that he sets today is all about this number right here, the interest on the debt, what we pay every year for interest on the debt. So, that's it. So what happens when people don't want to buy our debt? Well, we buy it back ourselves. That's what's insane, right? This is what's happening. This is what was announced today. So this is actually kind of bullish, to be honest with you. I think it's bullish. I think for the markets as an investor, this is probably a good sign, believe it or not. But the Treasury announced, right? So Janet Yellen is the Secretary of the Treasury. So this is her crew, her people, her responsibility. They've announced today they're going to buy back their own debt. Like we talk about a money printer. So you print money that we don't have to spend it. So you create debt. Nobody wants to buy the debt. So you print more money to buy the debt back. You know what I mean? I don't understand it. I don't understand it. I mean, I understand it, but it's insane. It's insane. So, as an investor, you have to think about to yourself, all right, is this what I really want to invest in? If this was a company that was running this much debt and had to issue debt to pay debt, is that a company I would want to invest in, right? Is that somebody I would want to do business with? That's what's happening here. So how did we get here, right? Because it wasn't always like this. The people we elected made some decisions along the way. Oh, and real quick, I just want to show you this. This is from the Treasury's website telling you why this is a good thing. Buybacks are a good cash management tool. They give us flexibility to manage the public debt. How about you don't spend the money that we don't have and create more debt? Okay? By buying higher yield debt and replacing it with lower yield debt, we may be able to reduce what the government pays for interest. Like I don't know. So that's what it is. So how did we get here today? How are we in the position that we're in? Well, we looked at the list of presidents, okay? And again, not political, because both sides have done it. It all started in 1971, I would argue. That's when President Nixon took the U.S. off the gold standard and turned on the quote-unquote money printer. That's it. Since then, the national debt has been out of control. Everything has just been on a decline. It's ratcheted up in the past probably 20 years. And it's never going to get any better, right? Here's a great website if you want to research that. It's WTFhappened1971.com. And it's just somebody posting all these charts about economic data since that decision was made in 1971. You know what I mean? So it's interesting. So that's where we are, right? So there is no consequences for spending money, printing money. You can print money to buy back the money that you owe that nobody wants to buy, so you can pay it off that way. Eventually, it's all going to come to a head and potentially come tumbling down. Countries do go bankrupt. It's happened. They're not officially bankrupt, but it just happens. I remember growing up as a kid in Europe and looking at exchange rates, right? And I remember reading the newspaper, the Stars and Stripes, and every day it would be the US dollar, the price in British pounds, Deutschmarks, the guilder from Holland, Turkish lira, whatever it was, all these different currencies. And it blew my mind. I didn't understand how that number could change every day, but it fascinated me. And all these years later, I understand why. Because it's just pitting two government monetary policies against each other, and they change throughout the day. And as a kid, even back in the late 80s, early 90s, Turkey had terrible monetary policy. And I remember reading these exchange rates like, man, if I had $1,000, I'd be a millionaire in Turkey. Little did I realize the Turkish lira at the time had no value, right? And they've bankrupted that currency many times. So that's just what happens, right? So you can't print the money forever. Eventually, nobody's going to want it. And I think that's what they're saying today, right? They're like, hey, we're just going to print more money to pay off the money that nobody wants to buy for the debt, right? And what do stock markets like? Well, they like money printing. They like low interest rates because that funnels money into the system and it helps investments grow. So if you want to insulate yourself from the effects of that, you need to buy assets. That's it. Real estate, certain stocks, certain crypto, not financial advice. Do your own research, but just understand if you're keeping your money in cash in the bank and you are buying bonds and treasuries, that's what you're investing in. And if you're happy with the way things are being run, continue to invest. If you're not happy with the way things are being run, look for a better way. And that's kind of what the point of all these videos are. All right, guys. So let's see what happens today at 2 o'clock with Jerome Powell. And hopefully, we'll just see where the market goes from here. But I want to get my 2 cents in before it happened. All right, guys, take it easy. Good luck today. And let's see how it rolls. Have a great one.